Welcome to the Frictionless Innkeeper Podcast. Coming right up, fresh tips and insights from lodging professionals aimed at helping you improve your business. Our podcast is brought to you by the Frictionless Guest App, the digital concierge that helps your guests to live like locals. Learn how at frictionlessguest.com. Mr. Steve Short, how are you?
Mr. Matt Lang, and I'm doing well. How about you, Matt?
I'm doing great. Our next podcast right here is with Mitch Pies, and probably pretty well known in the industry. I know he attends a lot of the lodging trade shows, but he owns and operates Mitchell J. Pies Insurance Agency, and he's really the lodging insurance guy. Great guy, too.
Yep. Yeah, great conversation. And we were talking afterward that he's at all of the ALPs, all the big conferences, and I see him there, not physically, but I know he's there. I just haven't really talked with him. And so you and I were talking recently, hey, we haven't done anything about insurance, and Mitch is he seems to be the guy to talk to. So, let's get him on. And he was gracious enough to come on and talk to us about all kinds of stuff and tell us some cool stories. And I think let innkeepers know at least the core stuff that they need to know about insurance for their properties and their business. And it was cool. Interesting conversation.
Yeah, very much so. Very enlightening for me. There's a lot of stuff that I'm certainly not an insurance expert, and I'm not a lodging owner, a property owner, but just to hear some of the nuances and the stories that he was sharing. And there's a lot of things to consider when it comes to insurance. And what I loved about this podcast that Mitch just did is that I think this is really educational for any prospective innkeeper, current innkeeper, buyer, whatever it may be, to really get buttoned up and understand all things about insurance.
Yeah, I think like some of the other folks we talk with, what we've learned, this is such a niche sort of industry, right? And what is important is if you are, a business property owner of an inn, B&B, whatever, that it's a niche business. And what you need to do is you have to have people who specialize in this kind of thing to make sure you don't just go to the generalist who's not going to know how to handle things for your property and your business. So Mitch is the kind of guy who's been doing this for 20 plus years, and he's a specialist. And that's the type of person you want to talk with and work with because they know the industry like nobody else. So.
Yeah, exactly. And actually, Steve, with that, we hope you enjoy this Frictionless Innkeeper podcast interview with Mitch Pies, who owns and operates the Mitchell J. Pies Insurance Agency. All right, Mitch and Steven, thanks for joining us.
Thanks very much, Matt. It's great to be here.
It's great to have you, Mitch. Steve, it's always a pleasure to see you. How you been?
Matthew, I'm doing well. Life is good. And Mitch, thanks a lot for joining us. We appreciate it.
Yeah, I appreciate it too, Steve.
Yeah, this is really good stuff. We've never really done a podcast before with an insurance provider for the lodging sector. So this is going to be a really interesting topic for us today. And Mitch, let's go ahead and kick it off and tell us a little bit about your background and how you got into hospitality.
So, yeah, thanks, Matt. Actually started out in a very different profession. I was in education. I was in a program that geared to administration of college campuses, auxiliary services. So I spent 17 years of my career on different college campuses and eventually decided that I wanted to do something entrepreneurial and landed in insurance. Initially, I was doing property and casualty, home and auto, got bored with it. And I happened to be on a trip in Alaska to a lodge called Lake Louise Lodge, and the owner found out I was an insurance guy and started asking me questions in which I had no clue what the answers were, and learned very quickly that the hospitality industry in general, and certainly this particular gentleman, had unique needs, unique exposures, and I was intrigued to the point where I eventually was able to answer his questions over a period of time and learned that in this experience that most innkeepers, most owners of small independent properties don't have the brokerage connections that would give them the expertise to manage their property from an insurance perspective. So the last almost 20 years, I've been working with hospitality properties and have found it very rewarding in that most of the time you're dealing with people that are really passionate about what they do. And have developed some very good friendships over the years.
So interesting. So do you see your role? Is it more like the value you provide? Does it tend to be more upfront because you've got someone that's maybe new to the industry, or meaning new to lodging, right? Independent lodging, basically. And so you've got to kind of educate them as well as find out what their needs are and kind of match them up with the right set, the right solution for insurance. Is that predominantly where the interaction is? And then, it's a check in every year or so, or they come to you whenever there's something new. I mean, how does the relationship and I guess kind of that value add take place? Is it more upfront when you first have a new client, basically?
Steve, I think you're spot on. And that's exactly right. Most of that relationship is developed, or the meat of the relationship is developed from the very beginning. And I think the key word that you used was education. Most innkeepers don't, I say the vast majority of innkeepers don't understand, nor do they want to understand insurance. And I don't blame them from the standpoint that, they've got a full-time job trying to figure out their bottom line and their operations, and they have a ton of responsibilities, and insurance is on the back burner for them. So I see it as my job, absolutely, to educate them from the beginning, to do a discovery analysis of their unique situation, because not every independent property is the same as the next property next door. And there's some unique characteristics that maybe one property has that another property doesn't, or vice versa. So yeah, that education and that discovery is a starting point, and hopefully creates a dialogue in which we are able to get on the same page and make sure not only that the innkeeper knows what they're covered for, but maybe more importantly, to know what they're not covered for.
Right. Talk about, I guess, the importance of insurance. I mean, everybody kind of knows basically, hey, you need insurance for the bad stuff or whatever. But for lodging, it's more than just a property, it's a business as well. So, and maybe since most people know for homeowners type stuff, yeah, obviously if the house burns down, you got to be covered for something like that. But what is it that's different about lodging and insurance for lodging? Why is it important beyond, I guess, just the typical kinds of issues you'd have as a property owner?
Sure. Yeah. So the big difference between residential and commercial when it comes to hospitality versus having a home is you're dealing professionally with guests and vendors, as opposed to a home or a residence where, yeah, you have friends over and you may have someone do your roof, a contractor, a vendor. But the homeowner's policy is written much differently. When you look at the language and the legalese in a homeowner's policy, it's considerably different than a commercial policy. There also are different exposures. And I'll give you a quick example. I had a claim years ago where a gentleman called and said, I'm being sued for copyright infringement. And I thought, wow, how does that happen in hospitality? And the story goes that he had bought an inn, and the contract unfortunately didn't specify that he could use the prior name of the inn. And the prior owner, for whatever reason, decided that they were going to sue for copyright infringement because he's using the same name, which seems crazy, but that's what
Yeah.
you see in the insurance industry is craziness. In that case, there was no coverage. There's an exclusion for copyright infringement in most commercial policies, including the hospitality policies that I sell. So, it's the point being is that I don't know if a business model would fit a residential, and the policy wouldn't fit a residential risk as much as the vice versa. Residential policy wouldn't fit the commercial risk.
Hmm. What are some of the, I guess, core aspects of insurance policies for lodging? What are some of the basics? I mean, we've got, I guess, certain coverages or whatever they would be called that you're probably going to have in just about any policy for, I guess, a business or maybe even lodging or whatever. And then I'm sure there's going to be a lot of add-ons that are specific to the property. But what are the core things that they have to have as a lodging provider?
Sure. Well, there are two primary core components to coverage. One is liability, which I'll get into here in a second. And the second is property. Of the two, the one that has the biggest potential for loss is liability because it could be endless compared to something finite like a property. Examples of exposures and liability, that the most common, and then I'll get into some that are a little bit more, what I would say, obscure because they're not thought of, but they happen every day. So the first, which is most common, is simple slip and falls and people getting injured in your building or next to your building or on the land that you own. Those are common everyday claims. The extreme is where you have a vendor on the property and the vendor, say it's a massage therapist or say it's a gardener, and that person has no workers' coverage and you don't have the right workers' coverage. And now you've got a situation where a vendor gets hurt or a guest sues the vendor and sues you at the same time, such as the massage therapist. So there's a lot of different exposures based on the activities. You know, if you rent bikes, if you sell alcohol, if you have a water exposure like a swimming pool or a lake, do you have hold harmless agreements? If you're incorporated, for example, is the corporation listed correctly on the insurance policy? Insurance policy is very specific to who the insured is, and it needs to match the operating entity and possibly the property entity. And if people are not understanding what their entities really are, that can create a problem with how the insurance policy responds. So that's the liability side. The property side, a lot of what I see is the big term that people do not, and it's a tough term to understand, but they don't understand it because it's something unfamiliar to them, is coinsurance. And basically, most commercial policies are saying that you have a responsibility to be within a percentage of what your true replacement is on the building. And if you're not, you're going to get penalized on a claim. So if you have $1 million building and the adjuster shows up and there's a kitchen fire, and the adjuster says, well, this building's really going to have to be a $2 million rebuild. Well, you're out of compliance with the coinsurance requirement, and you're going to get penalized on that claim. So it's really important to the bottom line to make sure that the property's insured to value. And that doesn't mean market value. That means construction value, which can be totally different than market value. So don't ask your realtor that question, ask your builder.
Yeah, for sure. Is that called replacement value? Is that how it's described?
So, yeah, good question. There's different options that you can choose. There's replacement cost, which a quick definition is if you have a roof that's $20,000, regardless of how old it is, and it costs $20,000 to replace, minus your deductible, they're going to replace it dollar for dollar. Another option is actual cash value, where you have a 20-year-old roof and you say, boy, you're going to depreciate the roof. Maybe it's $20,000 to replace new, but it's only worth $10,000. So they're only going to give you $10,000 under actual cash value. So there's different options. There's agreed value where you can agree on a value. If the insurance company agrees and you agree, it can be simply a means of paying off the bank, paying off a loan and no more. So there's different options with different companies. The most common, of course, is replacement cost or replacement value.
Okay. And that's especially important with historic homes, right? Where if you've got something where the age itself is of value. So I don't know what's a good example. I don't know. something flies through the window and it breaks the window. Well, I don't want an Anderson window to replace a historic window. I want a true replacement of what was there. Is that truly what replacement cost is, or can you get kind of shafted on those depending on the policy?
That's a great question. And you're correct. The policy language can dictate how that window's replaced. So if you have a historic property, and I'll throw another element out there, some historic properties, you can get tax credits for renovation. And those tax credits can be insurable. So not only the window example, but the tax credits. And if you're looking at, say, plaster and lay versus drywall,
Right.
just because it says replacement costs, when you read the fine print, does that mean it's going to be replaced with the same window? Maybe the window's not manufactured. Maybe it's going to take a special order to have that window replaced. It could be the woodwork. It could be solid oak with who knows on it. And again, so that policy, the document itself is the legal contract. So just as an example, when you go to the historic registry and you look at their specific program, their insurance program that's part of that historic registry organization, that policy is written for a property that in reference to what you're addressing, and that is whatever's broken, as long as it's covered, is going to be replaced with like and kind, as opposed to just replace with what's available. So how the policy reads is as important, if not more important, than the actual replacement cost. You can have replacement cost, but what does that mean? And I think that was your point. Yeah.
Yeah, it's hard to, and of course, in the world of the internet and online shopping, or Amazon, let's compare products as if they're all similar. Let's have a bunch of columns that allow you to compare apples to apples, but you can't just say, well, all right, this is replacement cost. It comes down to the fine print, like you say, right? And that's where someone like you is necessary to be able to say, well, I'm aware of these things. I'm sure you've got 20 years of hard knocks and you've been down the road to see all kinds of strange things happen, and where policies probably didn't cover what property owners expected they would cover when something happened, I would imagine. So
Absolutely true. Yes.
yeah. Anything else on, I guess, the why question of, other than the obvious, right, of why do the lodging business owners need insurance? Is there anything else that you can think of? So, I mean, it's liability, property, any other things in terms of the products or things to throw out there
Yeah, I, so,
that are
I would
standard?
say that the awareness of what's not covered. So you have your property, you have your liability, and then you have within that liability, there are things, I'll give you an example. There's no coverage for employee discrimination. Now, I see that happen, whether it's something that's legitimate or not is not the issue. It happens in the industry where an employee will be disgruntled and there is no coverage. You can buy coverage. So I think what's important from my perspective is to educate the owner, the innkeeper, to say, okay, here's your exposures. Here's the ones I think you should absolutely insure for. They're just too risky. But here's some exposures that are not as risky as long as you mitigate for them. And in that example, you'd want an employee handbook. You'd want documentation of anything that's going on within your business. Other examples are sexual molestation is excluded from most policies. And again, you can mitigate for that. So I think the third element, the property liability would be, give me some examples of what I'm not covered for so that I can put into place the protocols that would offset that from happening.
Okay. When you engage, with a new client, is that kind of part of what you do? Do you kind of, cover what the obvious things are and then say, okay, here's this checklist of things to that aren't covered? And is there a way to get coverage on those kinds of things, or you can only do mitigation? But, or I guess if you're going to cover on at some level, it's probably going to cost you a lot of money, I guess.
Well, Steve, you're hitting the nail on the head. In most cases, you can find insurance for just about anything. If there's an insurable value, you can find some company out there that will quote it. The question becomes for the innkeeper, for the owner, is it worth that dollar amount, or do I mitigate it and self-insure for it? So you look at, say, the example I gave you on the discrimination, that policy at minimum is going to cost you $1,000 to $1,500 a year. You look at something like sexual molestation, it's probably going to cost you at least $5,000 minimum a year. It's a different exposure. Take artwork. If it's original artwork, there's a policy limitation on artwork. And can you get more coverage? Absolutely. Is it going to cost you? Yes. So I think it comes back to the tolerance for risk for that person making the decision. It's my job, I believe, to say, here's your exposures. Here's what we can do to address those exposures. You have some choices. You can pay for coverage, or you can self-insure. And the way I would self-insure is I'd make sure that you have these protocols in place.
Are there, just thinking about property, because you talk about artwork, I mean, a lot of these properties have incredible antiques and that sort of thing. Is there a limit? I mean, replacement value. I mean, first off, I guess you need to get someone to come in and appraise, I guess, right, the value. So is there typically a limit then, like a certain dollar amount? So, if the policy says, well, we'll replace furniture up to $50,000, but one of my antiques is worth $100,000 and I didn't notice that, then I'm out, right? So is that how that works? Or is it, hey, look, there's no cap. I've got the appraisal. Hopefully it's not more than a couple years old, and we can prove what was lost and here's what it was worth. How does that work?
Sure. So I'll answer it two different ways. The broad answer is it comes back to that policy language, and not all companies nor all policies are created equal. So there are companies out there that I would call Cadillac companies. Not that the other companies are bad companies, but the philosophy of a Cadillac company is they're going to cover those antiques, and it's in the policy language on how they're covered. Now, does that mean that you can't go to a company that's not a Cadillac company and not get the artwork? No. The best and surest way, in my opinion, based on my experience, is you schedule your artwork, you schedule your antiques. And what I mean by schedule is you have the appraisal done, you put it on file, you're paying for whether it's lost or whether it's stolen or whether it disappears in a fire, mysterious disappearance, whatever it might be. That's the surest way to make sure that item or the items that you're valuing are clearly insured regardless of how they're lost. And that's just scheduled personal property. You can do that on a separate policy if you'd like. There are companies out there that just do that. I just wrote a policy for an art show in Massachusetts. That's all that's on the policy is artwork. And if something happens to that in transportation, or something happens to it on the wall, or regardless of what happens to it, it's going to be covered. So now, are there policies out there that will do that without scheduling? Yes, but they're far and few between.
So typically, would there be a cap on? So if I've got $1 million property, or at least $1 million coverage for replacement, at least of the home itself, and then would the loss of what's in the home typically be capped? Is that a separate number typically?
Yes, yes, and yes. I'm glad you asked that question for a different reason, but let me answer the question the way you asked it, and then I'll throw my different reason in there. So most of the time, there is a limit on artwork. All right. So it could be 10,000, it could be 50,000, depends on the policy. So it's important to look at the policy, read the policy, or have your broker point out where the limit is. There's also the question of what is the perils, what are the trigger points that would cover it. So let's say it's mysterious disappearance. Is that going to be covered? Well, there's an exclusion in most policies for mysterious disappearance. If it's a fire, maybe it's covered.
What's a mysterious disappearance? How is
But
that
there's no
defined?
no explanation to why it's gone. Years ago, I had, to give you the quick example, I had a client call me and she collects those Fabergé eggs.
Right.
And she was looking to buy a new egg and she was on, I want to say eBay, not 100% sure of that, but she was online looking and she said, boy, that egg looks just like my egg. and sure enough, she went and looked for her egg and it was gone. And she started looking some more and she found out a lot of her stuff was on eBay. And it turned out one of the guests basically took these items and put them on eBay. So, you
Yeah.
know,
So it really wasn't a mysterious disappearance because she
it was
figured it out.
theft. It was theft.
Right. It was theft.
Right.
Right.
Yeah. Yeah. So, but another element to your question that I think is really important is inventorying everything. Because if you have a total loss, and I've seen this happen 2 or 3 times in my career where there's been a total loss, meaning everything burned, everything
Right.
in that place burned, and there's no inventory. So you might have 500,000 or $1 million worth of coverage, but now you have to prove it. You have to say, this is what I had. And how do you remember all that? You can't. So my recommendation to most people, if not all people, is do a video. If nothing else, do a quick video of every room, every piece of furniture, open every cupboard, all your inventory, your sheets, your supplies, and just make sure it's off premises or in the cloud. Because if you do that, it's going to be a lot easier reconstructing it.
Yeah, I remember us having to do that and putting it in the safe deposit box with photos and all that stuff, as opposed to now you do a video and it's in the cloud pretty much.
Right.
So you got less to worry about there,
Yeah.
other than we have an appraisal of the furniture and that sort of thing in the safe deposit box. Talk about, and we do want to get to some of those outlier stories in that before we finish up, but what are some of the trends? Where are things going? And I'm sure people are thinking, well, trends in the insurance business, it's the insurance business, but I'm sure there are things that are evolving constantly. And then especially specifically for lodging, where are things headed right now? Like what's currently evolving and where do you see things going as well?
Sure. That's a pertinent question because it's a hard market right now. The definition of a hard market is that underwriters are much more what I would call diligent, for lack of a better word, in underwriting risks. Risks that I could submit 5, 10 years ago that would be accepted, no question, are being denied and having to go to the secondary market, which is a higher risk market. And I can give you some examples here in a minute. The soft market, which, 5, 10 years ago was a market where every carrier out there wanted more business, was lowering rates, was taking, if you could breathe, you were you were underwritten and approved. And now what's happened for a variety of reasons is that the market's gotten hard. And those reasons include the unpredictable weather patterns. That has been a huge factor. So when you look at the Midwest currently, I just had one in Illinois that they are, the company that they're with are saying, we're not going to write this risk anymore. It's too much of a tornado risk or a wind risk. So we're not going to even renew the policy. I go to a secondary market or try to find a primary market, and the deductible on wind hail is 5% or $25,000 or more. The premium's twice as much. So storms and weather are a huge factor. Social unrest is becoming a huge issue. I had a client in San Francisco that was turned down by 4 different companies, wouldn't even quote it because of his location in reference to what's happening with crime and activity related to that neighborhood. They're using fire scores in California, fire scores in Washington State. There's crime scores now that I've never seen used. 5 years ago, there was no such thing as a crime score related to insurance. There's credit scores. So what I've seen is over the last 2 years, premiums increase a minimum of 10%. I've seen some go up to 35%. I've seen the coverages diluted, deductible being forced, coverages, especially when you get to the East Coast, the deductibles on wind and hail are at minimum 5%. In Florida, it's difficult to even find wind and hail coverage unless you can get it, but it's beyond expensive. So the market has become very difficult in reference to the consumer getting good prices and the consumer getting what I used to see as a more comprehensive policy. Earthquake this time and day, or this in this age, so to speak, compared to 5, 10 years ago, you can't get earthquake unless it's a specialty policy. So whether the market goes soft and takes a turn, hopefully it will, but it's not today.
Do you think is that a reflection of a less stable world, whether it's physically, geographically, or politically, socio-political? Is it more that the insurance companies and what are all of the analytical people called? What are not
The
adjusted?
actuaries?
Yeah, are the actuaries just modeling better based upon what's out there in terms of the systems and how they can figure out how to mitigate their potential loss? What is driving that?
Sure. So ironically, the actuaries are having trouble modeling. When you talk about the stability of whether it be the economy or world affairs, it is creating, in my opinion, a lack of predictability. Things are changing so fast and so instantaneous, whether it be weather, whether it be political unrest, or whether it be economic issues, whether it be the social issues of the day. It's all impacting the insurance industry as much as it is other industries. The problem with the actuarial side is predictability. It would be much easier to predict these claims. I mean, most companies use a loss ratio percentage of 35%, meaning that they know that any given year they're going to pay 35 cents on the dollar out for claims. Some of those loss ratios are up to 80%. And you can't stay in business at 80% because that means you're either firing people or you're getting rid of systems because you can't afford to keep them. So if that loss ratio is expected at 35%, it's at 80%, you're going to have to raise your rates and cut coverages. And a lot of these companies are splitting the risk with reinsurance, which is a way of the insurance company simply saying, I'm going to offset some of my exposure by using a reinsurance company. And those companies are having the same problem. Their reinsurance costs are going up because the unpredictability of saying, this year we're saying it's 35%, but it came out at 80% or whatever the difference was. So that the point being is the lack of consistency and the lack of being able to predict because of all the what's going on in the environment it's difficult. I wouldn't want to be a guy that sits around a crystal ball and say, here's what's going to happen, because you're going to be wrong.
Indeed. So let's get to kind of the tail end, the fun part here. Talk about, we would like to hear a story or two because that always makes it kind of interesting. But I guess talk about the exceptions, some examples of, like you had said, the awareness of what's not covered is important. And so just to kind of go out in the discussion here, stressing the fact that insurance is incredibly important and you really need to know what's not covered, just like, what is covered, and make sure you have all the right coverage in place in terms of amounts and all of that. What are some things that maybe the average innkeeper is not really aware of that could really bite them, I guess?
Sure. The most common one that I've seen, Steve, is seepage through the foundation. I've had over the years at least a dozen people say, I've had water damage. Okay, what's the cause? Well, it wasn't a pipe. It wasn't a frozen pipe. Didn't come through the roof. It came through the foundation. And there's generally an exclusion in the vast majority of insurance policies for that's under flood. And flood is excluded from most policies. You have to have a separate flood policy.
Wow.
So I have seen where water has seeped through the foundation and the claim has been denied, and we're talking thousands and thousands of dollars. It could be a flaw in the foundation. It could be that there's truly a rainstorm and the foundation can't handle it. But the bottom line is excluded. So that's the one that has, as far as I'm concerned, surprised most people. The one-off claims I've seen, I talked briefly about sexual molestation being excluded. We did have a significant claim that cost well over $1 million in attorney fees that was excluded from coverage. Now, can you get coverage for sexual molestation? The answer is yes, but it's expensive. So how do you mitigate, and what is your risk tolerance for that is all relative to understanding that you don't have coverage. But if you understand you don't have coverage, you can put controls in place that hopefully would prevent that type of claim. You know, there are some situations where insurance companies will step up to the plate because it's a gray area. Years ago, I had a claim where it was a loss of income claim, and the insured had been forced to close their property. It's hospitality properties. If they close, they're not making income. There is no guest income. And in that situation, there was a 3-day waiting period. It was over a holiday weekend, and we're talking thousands of dollars. It was a pretty big property of loss of income. And there's a waiting period in that insurance policy, 3-day waiting period for if there's no damage to the building. And in this case, there was no damage to the building, but the adjuster started asking questions and was pushing the insured in a direction. And finally, the insured got it and said, "Oh, I think there's smoke damage to my walls," which was a true statement. So now there's damage to the building, and now there's immediate coverage for loss of income. So I think, at least as far as I'm concerned, you try to do, and the adjusters try to do the right thing for the customer. And if there's a gray area, in this case, there's no coverage for 3 days, but is there a way to find the coverage? And in this case, the adjuster did the right thing and found coverage legitimately, but had to ask the right questions. So I think when you're looking at exclusions and limitations in a policy and there's a claim, you need to comb that policy with a fine-tooth comb, so to speak, and see if there's a way that it can be afforded. I don't know if that addresses the question, but yeah.
Just out of curiosity, how did COVID play into that whole loss of income thing? I assume that insurance didn't cover anything because that's a natural, whatever, act of God or something, or an act of Wuhan lab or something. But anyway,
Right.
yeah.
Well,
I mean,
the insurance policies that I'm familiar with, which is pretty much everyone I've ever seen, has a exclusion for virus. So
okay.
COVID was a virus, total exclusion, not covered. So unfortunately, and it was a disappointment, not only to me, but bigger disappointment to my clients that it wasn't covered, because that was a huge hurt. You know, luckily for them, there was government relief that they were able to apply for. And in most cases, they were able to get through that period and survive. In some cases, they did not survive, and they ended up having to close the inn.
What about, I could go on forever. So Matt, you're going to have to calm me down here shortly, but I'm thinking about not necessarily what you consider natural disasters, but man-made disasters, such as, like, you had the town in Ohio where that terrible train wreck was, and it caused, all of this
Another
gas or
cargo, yeah.
all this chemical stuff. I mean, if that I think that was kind of I don't know that I doubt that town. It sounded like it was, one of the tragedies was it was a very working class town. And, so it wasn't a destination town, but what if that had happened in a town where there's a whole bunch of like Galena that's got, a huge number, 20, 30 plus independent properties. What if something like that happened there and the town had to be shut down for weeks? Is that the kind of thing that might be covered?
Good question. And the word might be covered is probably the best way to describe that. So the example you're using is a good example from the standpoint that it wasn't caused by our insured. It wasn't caused by that particular property. The cause was elsewhere, but it's impacting that property.
Right.
So then the question becomes, well, there's several questions, but one of the questions is, will the policy respond? And in the case of loss of income, there's some legal issues. For example, if the town, either the federal, state, or local municipalities say, hey, this is evacuated, that is a trigger on most policies to say there's going to be coverage because there was a legal decision to evacuate the town. Now, if there's an exclusion in there because it could override the cause, meaning in this case, a chemical accident, which, to tell you the truth, I don't know if there's an exclusion in there for that or not. But one of the elements of this scenario is, will your insurance company, my insurance company is the owner of the property, mitigate against whoever caused it? And that's where you get into some interesting defense questions, because you're going to have attorneys representing you because you have that insurance. The attorney fees are part of that policy in addition to your liability coverage. So will the attorney go after and subrogate against whomever caused it or whoever was responsible on your behalf? So there's some elements there that are going to impact that claim.
Okay. Interesting. Boy, I could definitely go down the rabbit hole of asking about all kinds of crazy stories because I'm sure you have them, Mitch, especially doing this for 20 plus years. So, but I know Matt's got to, as I say, reel me in.
Reeling in. Yes.
Yeah, reel me in, Matt.
You got it. No, this has been great, Mitch. Really appreciate the insights. And my usual last question is there anything else to add or anything we may have missed today?
As Steve said, Matt, we could go on forever and I could talk forever. I appreciate the opportunity to have participated in this. I don't know what to call it, an exercise, call it a podcast. In this podcast, it's really been a lot of fun, and hopefully it will benefit whoever is able to listen to it.
That's awesome. Yeah.
Yeah, we appreciate it. Yeah. And I'm sorry, Matt, go ahead.
I think we're going to ask the same question. Mitch, feel free to let our listeners know how they can get in touch with you.
Yeah, I appreciate that. You can either email me. There's Mitch at lodge and in with 2 N's insurance.com. Or you can call me on my cell phone, which is, fine. It's 314-952-3605.
Wow, you really are the independent lodging guy, because most insurance guys probably wouldn't say, here's my number, call me. Here's my mobile number, here, call me anytime, right?
Right. Yeah. Well, I think that's part of the service, and part of that relationship is to make sure that it goes beyond the 8 to 5 commitment. It's a 24/7.
Just like the innkeeper's world, right? No different.
But I don't have to clean bathrooms unless my wife tells me you're cleaning the bathroom.
I hear you. Great. All right, Matt, you want to take us out of here?
Sounds good. This concludes this Frictionless Innkeeper podcast interview with Mitch Pies, who owns and operates the Mitchell J. Pies Insurance Agency, which is part of Leavitt Recreation and Hospitality. And as you heard, Mitch was kind enough to share all things related to lodging insurance. And our podcast is brought to you by the Frictionless Guest App, the digital concierge that helps your guests to live like locals. Learn how at frictionlessguest.com. Once again, that's frictionlessguest.com. And Mitch and Steve, thank you both so much for your time today.
Thank you, Matt.
Thanks, Mitch. We appreciate it. Take care.
Thanks, Steve.